You really shouldn't get excited about a tax refund. I'll explain why. Hi everyone, Keith Wilson here, spreading a wealth of information. So, hey, it's tax time. People are getting their documents gathered up, ready to prepare their tax returns. And hey, over the years, I've done a lot of tax returns for my clients, and I've noticed when someone gets a rather large tax refund, they're overwhelmed with excitement and joy. Hey, I get it. Nobody likes to owe the IRS. You'd rather get a refund than owe, right? But if you're getting a rather large refund, this is what's happening. All a tax refund is the government returning your own money back to you because you withheld more taxes than you should have. And so people will treat a tax refund as a shopping spree or an excuse to buy whatever item they want to do. If they withheld the proper amount of tax, then throughout the year, in your paycheck, you would have more in your pocket that you could save more towards retirement, beef up your emergency fund, or pay down debt. So you may want to consider readjusting your W-4. So what is a W-4? A W-4 is a form that the employer gives you that you fill out. There's this worksheet and all this stuff. It pretty much dictates to the employer how much taxes to withhold from your paycheck each pay period. So the IRS has on their website, they provide a withholdings tax estimator or calculator, and it's free. Anybody can go there. I'll put the link to that in the comment section below. But if you fill out this W-4 tax estimator, it will give you an idea of what you should withhold. All right, so once you go to this site, I'll put the links down below, you'll get into the tax withholding estimator, and you'll need your last pay stub to help you fill out the information. This is just an example, folks, hypothetical. Everybody's going to be different. It's just kind of a guideline to show you how to estimate what either your tax refund is going to be or how much you're going to owe based on your last pay stub. So in this example, we're just filling this out, your filing status. Let's just say it's single, and no one can claim you as a dependent on their tax return. Let's say you don't have dependents. You will hold this job for the full year. You only have one job. You don't receive pension income or other sources of income. Now, again, everybody's different. You're going to have to look at this. If it pertains to you, obviously, you check those boxes. And do you expect to hold the job for the full year? Let's say yes. Let's say you get paid weekly. Let's say your last pay stub was January 16th. And let's just say hypothetically that you expect your wages to be $55,000. And let's say you haven't gotten any bonuses this year and you don't really expect to receive bonuses. If that pertains to you, obviously you want to fill that in because it's going to make the numbers different. And I just made this up. Let's say year to date, since that January 16th pay stub, we withheld $305 for federal, and just for this one pay period, we withheld $140. Let's also say, nope, I'm not contributing to a retirement plan. If that pertains to you, obviously you fill that in. It makes the numbers different. And we don't contribute to an HSA or anything like that. Let's move on. Let's say we don't want to go into the adjustments to income. And also, let's say you're just going to take the standard deduction. You're not going to itemize. When you itemize deduction, you got to list, medical expenses, property taxes, things like that. We're just going to take the standard deduction here. So, and then the next section is tax credits. Let's say you don't qualify for any tax credits. We're just going to look at the results without those tax credits. And while I look at this, it's pretty neat. It gives you a gauge here on, based on the information that you enter. Remember, this is totally hypothetical, what I entered, but based on that information that I entered, the estimated overpayment, tax refund, is $2,072. So that might make you feel good that, hey, I'm going to get, in this example, $2,072 in a refund. But remember what I said earlier, that's money that could have been in your pocket each pay period that you could have used for whatever, debt reduction, savings, or what have you. Now, what's neat about this estimator is this little slider bar. Let's say I don't want to get that refund, a year later. I want more in my pocket. So let's say I just wanted a refund of whatever. You certainly don't want to owe, but let's say I just want $100 in a refund. And this is based on that pre-tax wages of $55,000. So in this example, then what they're saying is, all you have to do on your W-4, let me zoom in on here. The IRS is kind of giving you a guideline of what to do with your W-4 on line 4C, and they're saying enter 0 in that line 4C after you filled out everything else completely. Remember, the W-4, something supplied to you by your employer, so if you go through this and you find yourself getting an estimated larger refund that you're going to have to wait for, and you want more in your paycheck, then adjust your W-4, talk to your employer. And this is saying right here, to get your desired refund amount of this slider bar of $100 instead of that $2,000, then you will need $98 withheld from each paycheck, which is, in this example, is $42 less than your current tax withholding. So this will give you a guideline of exactly how much to withhold. And remember, more money in your paycheck means more money you could put towards your emergency fund, save towards retirement, or pay down debt. Hope this helps. And if you'd like to see more videos like this discussing your personal finance, be sure to hit that subscribe button below. I would really appreciate it. Thank you, and remember, be wise with your money.